too. There are a lot of calls not to buy the dip, but our next guest says he likes some healthcare names, and that's a sector holding up in today's down market. Joining us is Peter Andersen. He's the Chief Investment Officer with Andersen Capital Management. Peter, there's a little bit of a theme here because I think yesterday we spoke with an investor who liked healthcare. Today we just talked about the sector outperforming. What's going on here?
Well, I think healthcare, not just in general, but specific names in healthcare are mainly inelastic to whatever is going on out there, Kelly. So the reason why I like select healthcare names is I have picked them regardless of what the outlook is for COVID, inflation, China, whatever you want to throw into that mix, retail sales, all that stuff, I think distorts your basic thesis, and I try to find names and themes that are I can ignore all that stuff because it's very, very difficult to, factor in all those issues. And healthcare is something that we just won't give up. Some healthcare we will, elective procedures, for instance, but mainly the basic healthcare that would be our last leg of spending to give up, I think.
And people might be surprised about your particular plays here, which include hearing aids and, Zoetis, your pet meds.
Yes, yeah, pets and humans. And first, a little bit about humans. People, as they age, about 50% of the population, although they don't want to admit it, most of them do lose hearing capabilities to a great extent sometimes. And Sonova is a really thinly followed company. I was surprised when I discovered it that more analysts weren't looking at it, but they are at the high end of hearing devices. A lot of these simple hearing aids are merely amplifiers, and they don't work very well in crowded rooms. And so I sought a name that would have the highest level of technology because we have that capability now. We see it in other technologies, and hearing aids have been late to the game.
Yeah.
Sonova makes the top-end hearing aids that most people are very, very satisfied with. And as I said, it isn't followed at all by Wall Street because it is an ADR, it's a Swiss company, and it looks just very, very promising.
And it's up 50% this year. I think the Zoetis story people are obviously a little bit more familiar with, but there's another theme as well that you're following. It's something actually in our house that we've recently been trying to consolidate. AMT is a cell phone tower play of yours. Equinix, which is data storage, and you think that the need there is vast. So again, putting aside these day-to-day concerns about Delta and the Fed and bond yields and how exactly this is going to play out, you say people like me have 20,000 photos or whatever it is, they can drive secular investing trends.
Well, Kelly, rest assured you are not alone. I mean, all of us out there, and that is the wonderful thing about Equinix is the demand is so strong because there is so much volume of material, either very, very serious things like medical records of CAT scans, for instance, that are very, very dense in data, all the way down to, pretty frivolous things like filming, I don't know, your dog singing Twinkle, Twinkle, Little Star. There's all this kind of stuff, and it has to have a home, and Equinix is a place that builds all the data storage. So I don't think that's going to go away either.
Good friend of mine, Peter, has a dog I met 2 weeks ago who actually sings along with taps at the end of the day. It was the most funny. It was a hilarious thing. I mean, this dog was a poodle, and it was, it was really something.
Well, I hope it's on film. It will be on film, and it will be stored somewhere, as you know, Tyler.
I am sure that Steve Shanker will take care of that for us. But at any rate, what do you think of what's happening in the market today? How do you explain today?
Yeah. For your viewers and for my clients and all investors out there, I think this is much more challenging than 2020. And I think we're all desperately looking for a roadmap. And a lot of us tended to think, well, maybe 2008 would be a roadmap, but that was a world credit crisis. This is a world health crisis, so I don't think that applies. But as I was preparing for this, I thought there is one bright data point, I think, that we now have about COVID, which is from March 2020 to March 2021, the S&P doubled. That is a firm data point that we have developed during this pandemic. And so I look toward that as, aha, that might be a map for how we will perform going forward. If we have another breakout, for instance, of COVID, whatever variant it might be, maybe that's how the markets will respond. And that gives me a lot more confidence in trying to model this as some past catastrophe or a sell-off that we can try to replicate. I just don't think that's the case. And I think people are getting very, very frustrated with trying to find a compass for this. And I urge them to think of that. The S&P 500 doubling. And if you had me on March 2020, I think the tone of all of us was very, very different. And lo and behold, a year later, we're up, double where we were.
But you're not wishing for a return to those days in any sense, are you?
Well, I'm not wishing, but you have to be a realist in this. And let me give you an example. If you Google how effective is the J&J vaccine against the variant, you will get back-to-back answers. One answer will be very effective, I'm summarizing, then the next answer will be questionably effective. And I think that's endemic of what we know about the future. And so you have to include the fact that we may have another sell-off. Is it likely? Who knows? But as we develop all this, I think we're on tenterhooks looking at individual data like the retail sales, for instance, and concluding maybe the COVID shopper is just a crazy shopper right now, and we don't really have a data trend on that. So all scenarios are possible right now, and I just think that's why it's even more important to find stocks that almost are independent of all those scenarios.
COVID-proof.
Yeah.
Yeah. Peter, thanks. We appreciate it. Peter Andersen.
And coming up, restaurants rattled will higher costs.